The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to take a look at the German DAX. As you can see, we went down into new low ground, and not to be surprising with the markets as weak as they are. If you'll take a quick look at what happened here, is the FTSE also went down and made a slightly lower low. So the end of the world is near, as you hear it in the financial press. But let's take a quick look at what we're watching here. As of last Sunday night, we were watching this in the E-mini S&P. We posted this in the newsletter, and what we're looking at here is a worst case scenario if 2570 fails. You see those two little numbers down there, A, B, C, D? Those are at 2475 and 2465. We had 2475 last night, and we rallied 40 handles. Now we're backing off to a probably 61% retracement at 2492 if it's going to hold. Now, if we go below all these numbers, you know, something is really amiss, but boy, is it set up for a rally, folks. This is set up not quite like it was in 2009 on March the 9th, but it is very, very close. Take a look here. We're going to walk you through this just to show you what we're watching. Here's the same pattern that we were looking at in the newsletter for the New York Stock Exchange Index. The ABC fails to hold 1130.30, and that's what we hit yesterday. 1130.30 was the low. The actual low was 1130.13. We closed at 1113.71. And I want you to focus on that ABCD pattern that you see there between September and December, because that's the key to what we're looking at. Now, the New York Stock Exchange Index is the broadest of all the indices that we have for the stock market here in the United States. It's the largest stocks. I believe there's 2,300 of them, and they're the highest cap stocks. They're the biggest volume stocks. It's a representative of what really the stock market is. It's not like the NASDAQ where you've got 10 or 20 stocks that are tech stocks, and it's not like the Dow Jones with only 30, and it's not like the 500 S&P 500. This is the real deal. So let's take a look at this on a little bit shorter term basis, and I think you're going to see something that I think is relatively a little bit interesting here. Now, what we're going to do is we're going to go and take the New York Stock Exchange Index and increase the size of the chart so that you'll be able to see it easy, and then I'll walk you through this to see if it's going. You're right, David, that dollar index did not hold 96, and when it didn't do that, it was Katie bar the door to the downside, but still an interesting spot. Look at this New York Stock Exchange Index, folks. Let's go to the high that we made on September the 17th. Count the number of days down until the low of October 28th where we had the rally. You want to count that for me? Okay, it's 27 trading days, and it rallied up to point C. And if you look really close at point C, you'll see that was a 61% retracement of the AB leg. Now, if you count the number of bars from point C down to point D, you'll never guess what it is, boys and girls. It is Christmas present time, 27 days down, where AB equals CD in both price and time. From the words of W.D. Gann, when price and time come together, it's happy time. But there's even something more important. We have to go in to the annals of Ralph Elliott, the Fibonacci man, and he's talking about the 1.618 expansion number of BC. If you can see that, it's a 1.618 expansion at 11,330. And if you go back to the expansion number from September down to October, if you look at that little red box there, between September 10th and 17th. I've got it marked at 1.618. You have a double 1.618 expansion. You have ABCD in price. You have an ABCD in time. If this market doesn't rally here, we will be moving to the 200-day moving average system that I've been developing over the past 35 minutes. Has to be retested a little bit. So far, I only have 2 examples, but this thing really looks like it's ready to rally. I mean, everything looks like it's ready to rally. Just take a look here at the IWM, folks. You'll notice, let me just get this up here. You'll see that even with the IWM, we made a 1.618 expansion, as you can see there. So there's a lot of things. The Dow Jones looks exactly the same thing. It went a couple hundred points, but when you're talking thousands of points, a couple hundred points is nothing among friends. So that's the real key to look at. By the way, we have a Christmas present for you folks a little early. Instead of getting it on Tuesday, you're getting it today. We have Norman, who calls it to the minute. Winsky will be on today on the 20th, and another birthday present tomorrow will be none other than Stan Harley Stock Market Letters, and we have a pre-Christmas gift for you right now, and this is from our friend Bill Meridian at Cycles Research. Unavailable to be with us, but he did send this on to us. You'll notice that stock, the December rally has begun, is what he's saying. Bonds are likely to rise through October. Gold is locked in a trading range. The China trade wars to extend into 2019. Trump chart is in good condition into March. The USD Sun-Saturn square is being stressful. And what we want to do is to watch what these markets are going to be doing now over the next 24 hours. This is key, folks. We closed below 2460 in the S&P today. Another really bad day down. You could be looking at something that you don't want to talk about, but it's got everything there. But remember, when these patterns fail, they really are not very, they're not very good. I mean, that's a real thing, to pay attention to. That's something I think that is, rather important. So we really need to really watch that. So is that true that February gold is trading at $12.49? I just saw it at $12.59. Did it just drop $10? Huh. Well, maybe it did. I don't know. We'll have to wait and see. All right. Now, I wanted to tell you something about notes and bonds that I think is very important. One of the things that I follow when markets are making new highs or new lows, I always watch the open interest. Open interest is the total number of players in the market, bulls and bears. And when open interest goes up and prices go up, that's very, very bullish. But when open interest drops and prices go up, that's thank you very much, Steve. I must have had someone posted a bad price in there. But anyway, that's good. That February gold looks like it's ready to head to that 1272, 1275 area just on the ABCD. Now, silver is lagging badly still, but it's still coming back pretty good from the lows that we made just a few days ago when it was trading at the 382 at 1237. We're going to take a little break here, and then we'll be right back to talk about the open interest in the bonds and the notes, and then also we want to talk about some FANG stocks.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
All right, folks, we're back, and I was talking about the open interest situation in notes and bonds. I posted in here the little graph that shows when you have rising prices and rising open interest, it's very bullish. You got a lot of players coming into the market. But if you have rising prices and falling open interest, people are leaving the market. The only thing that's making it go up is short covering, and that's a very important thing. We've shown this to you in silver, gold, copper, so many things. Doesn't work all the time, but it's in that 80% category. And the last 2 days in both notes and bonds, with the most positive thing you could get, in their opinion, is the Federal Reserve on the sides of long bonds, long notes, and the market didn't go. We made higher high today, of course, in the bonds, have not yet in the notes, but the open interest situation is doesn't look very good for notes, and it could change today, of course, and things could turn around, and we could look at a little bit more of lower interest rates for a little bit, but interest rates are going to go higher longer term. We're the same as we were last September when we were having one of these big rallies. I believe we were around the 148 level at that time, so we'll see. Now, Mr. Z this morning was talking about the dollar yen with the possibility going back to 99. I'm not sure it's got that big of a profit objective in it, but if we take a quick look here at the dollar yen, you'll notice here on the weekend when we were doing the newsletter, I focused on the fact that we were making a really nice 135 pattern. It was set up just absolutely perfectly, and it just absolutely started to work. And this notation that I put there is below that 112 level is very, very bearish, and we did that today. We're trading around the 111.50 right now. And, that's getting ready to take out the lows of October already. And that's just in the first week. That would qualify as a long-ranging bar down, which, of course, would be something that would be very, very negative. So that dollar yen is certainly starting to move a little bit higher. Now, let's take a look here. Lower, excuse me, folks, lower. Let's take a look at the FANG stocks for just a second, because they mean a lot. Now, these are all, these are from the, I updated them, but all I did was put the data in. I didn't change anything on the charts as far as patterns or anything, because it doesn't need to be, because these are the numbers that we were looking at coming in here to Sunday night. You'll notice that we were looking for a target of 160 in Apple. That's that 3-drive pattern, as you can see here, going back to November the 12th. Beautiful ABCD pattern ending at the 1.618 expansion of 160, and that was the low, 160.89. I'm not sure where it's going to be. So these stocks are all acting similar to what we're seeing in other things. So we'll just look at these one at a time. We'll go to the next day, which is Amazon. It's still holding above major support. You see we had that. Let's get it up here first. We had that 3-drive to a bottom pattern on November 20th. We had a very strong rally of 385 points. God, it's hard to talk about these numbers. And here we are coming down. If you look at this really closely now on Amazon, and I haven't changed anything, all I did was update the charts. I will do this over the weekend, depending upon, what the chart pattern looks like. But we have a nice head and shoulders pattern here in Amazon. The left shoulder is coming in on October 28th. The head comes in on November 20th, and here we are in the right shoulder, equal to the left shoulder, around that 1480 level, and that's a very nice head and shoulders pattern. So there's nothing super bearish on that. I mean, that looks halfway decent. Now the next one we want to look at is the Facebook, and that actually had an ABCD pattern to the upside, and then gave about 80% of it back here in just a little bit here. So let's just get this up here and put this up. You'll see we're down here at major support here at the 61% retracement at 133. So these markets are set up. Netflix is the last one. Let's get the old flicks up here. Netflix actually looks pretty good. I mean, it's been in a really strong trading range here for the past 2 weeks at this 261 area. Now, folks, if all these numbers fail, and the failure would be a trade below 2460 in the S&P, that would mean that would mean something really nasty. So I don't think that's going to happen. I mean, it's got that chart on the New York Stock Exchange Index is the epitome of technical analysis. It really is, because when you're looking at a technical chart, you're looking at nothing more than an X and Y axis. And what you're trying to do is you're trying to measure price, which is on the right axis, and on the vertical axis, and you're trying to measure time on the horizontal axis. And when you got them matched up together, that's an ideal situation. It doesn't work all the time, but that's in the realm of 85-90% of the time that pattern's going to work. We've seen it over and over again. We saw it on the tops, for heaven's sakes. I mean, we were yelling and screaming from September to October. We were seeing nothing but that same thing upside down. 3-drive to a top pattern, multiple butterfly patterns. I mean, that's what was happening during that time. And now we're seeing the opposite. You can't get anybody to buy this stuff. So this is what we're watching here this morning. So sort of pay attention and see what happens. But any really bad move today, and with the news out there, they're very sensitive to the news. It could easily change things, real easily, and it would be you could see it happen, quite a bit. That even going a lot lower. Now we got the gold trading at we hit 1265. If you'll remember yesterday, let's get that one up here to take a quick look at it, because we were talking about this yesterday. We might as well get it up here so you can take a look at it. But the price level on this we're looking at is between 1268 and 1273. Let's put it up here so we can take a quick look at it. Now the chart of platinum just doesn't look very good at all. I mean, it's still down near the lows around 787. It hasn't even moved at all. Silver has finally gotten up and taken out highs from a few weeks ago, but even then it doesn't look like it really wants to go very, very far to the long side. That's why I don't believe this is a breakout in the market, and that's the whole key. Just take a look at the platinum here. You can see how it looks like a ruptured duck. I mean, it just doesn't want to get out of its own way here. I don't know where we're trading, but last night we were trading around 785, and that the 786 retracement was at 782. We've been here for 2 weeks and the market hasn't even rallied. So that's reminiscent of what happened with the crude oil market. And crude oil is still flirting with those 78% levels down there at 45.60. We rallied $1.50. Actually, we rallied $2.50 yesterday, and it gave it all back in a matter of a few hours last night. So that market might not be, out of the woods yet. But anyway, we've got a break coming up here pretty soon, and then we will have our friend and colleague Norman Nowinski from Astro Trends will be on. Tomorrow will be Stan Harley. On Monday, we're going to have Tim Bost of Florida, out of Longboat Key, Sarasota area, Financial World.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, we're back, folks, and I believe we have Norm Nowinski of Astro Trend on the line. Norm, are you there?
Yes, sir, Larry. Good morning.
Good morning to you. Happy holidays to you, my friend, and take over the mic and tell us what you're looking at.
Okay, got my notes on the screen there, hopefully, and just going to review now. I was on here 2 weeks ago, just ahead of a full moon and book returning direct. If anybody's new out there and doesn't know what that means, due to the relative motion of the Earth, we pass planets, they pass us. Just like you're driving on the highway and somebody passes you, you look out your window, all of a sudden you may have the impression that you're going backwards. The planets do that too, from the point of view of the Earth. If you plot the planets individually, it looks like occasionally they stop their motion and then uh, uh, stop their motion and then switch their direction, change their direction. And so Mercury had been going retrograde until the night of the 6th of December, and it turned direct. And it's even more exciting when these important planetary events line up with the moon, like a new moon or full moon. And that's exactly what we had the night of the 6th. I think that the difference was like maybe 6 to 8 hours difference between the Mercury turning direct us forward, and the new moon. So there we go. We're going to be looking at the markets that I had here. This was your shopping list for early December. For that time, we're going to look at those markets. So most of your commodities, we're going to be looking for that cluster there, the 6th to the 7th. And then there was a secondary cluster the next week for the U.S. Had some big cycles hitting there, which could affect the stocks, T-bonds, and U.S. dollar. So here we go. Here's your S&P chart. The first chart I have on the page here. See the green arrows? There's your big cluster there for the 7th. And we made a little bit of a top there. And we came down from Monday the 10th. I had another big cluster there over the weekend for the 10th, right around there. It has actually my highest number on my activity calendar was for the Monday the 10th. And so then we made a little low there. Now here, what's interesting is this is one of my top things when the planets turn direct or retrograde, and somebody like 75% of the time you usually get a major turn at these points. Now when they occur, when the market does not, usually within 1 day. When it comes a little bit later, that's a kind of a clue that something's wrong. There might be a crack in the foundation. You still might get a temporary bounce, but then it will often fail later, and that's exactly what happened here. We made a temporary bottom there on the 10th. You might remember we had a bit of a panic low there. We rallied for about 3 or 4 days, and then we rolled over. And then this past week we took, I guess last week we took out that low. So okay, so now we're going to move ahead. Look at the T-bonds. There's your cluster there, right around the 7th, and then into the early part into the 10th. And it's pretty good there. We did have a miss over here where I was about 1 to 2 days early from that bottom, right around I was looking for a low around the 12th, and it didn't bottom till the 14th. Here we're moving now to the dollar, and you can see there that the dollar you could have, if you were a little bit early and bought on the, well, no, there's the 6th. No, this is good. You were very close to the bottom there on the 7th. It went just a little bit lower on the 8th and then turned around and had a big rally into that next the second week cluster, and then they made a top and rolled over and went back down. And as I think you mentioned just a little while ago, a bigger picture here over here as of last night, the dollar, it looks like it's broken its channel here to the downside. So this could have some longer term ramifications. The dollar is headed lower now. Keep in mind we have we're going to talk about it in a few minutes after we review these charts. But we got a full moon coming up this weekend, plus the solstice point. But we'll be getting that in a minute. Here's now another thing. Since Mercury turned direct in the sign of Scorpio, we want to look at markets that are associated with the sign Scorpio. One of those is cocoa, and look at that. Look at that spike high there. It had been going down. All of a sudden, I had a big rally high right on the 7th. That's Friday the 7th is that spike high, and then it went back down. There was a nice trade there. Here's your hogs. Hogs did something. No, didn't do the spike high thing, but made a night. Well, actually, very close to made a top on the 10th. The 7th was like a quarter of a penny from the high. Ahead of the 1 day early, and about a quarter of a cent from the high on the Monday the 10th. So that was pretty close. Good enough for government work. All right, here's your corn. Corn just went sideways, and so there was no money to be made there. One of the patterns you will see on my stuff is when you have a bad signal like that, usually you don't lose very much money. So maybe you want to waited a couple days and it's not working, you get out, lose a penny, a couple pennies, no big deal. Here's your beans. Beans, depending upon how quick on the trigger you were. If you were quick and you bought it on the dip on the 6th, then you made money. And if you didn't, then you're kind of not in a good position there, because if you waited, then it had a little bit of a rally. And for some reason, I said that was a miss on the 7th, but I'm not sure why now. All right, now we got the wheat. The wheat is almost almost a no-lose situation, a win-win, whether you bought it on the 6th or sold it on the 7th. We always try to buy on weakness, sell on strength. So either way, you could have made money. You bought the low or sold the high, and that worked out nicely. Here's your gold here. Made a nice little short-term top there right on this. Actually, I think it went a little bit higher on the Monday the 10th. But it was like the difference was a couple of dollars. It was almost nothing, it was maybe one day early and a couple of dollars short of the top there, Silver, not as friendly. If you were quick on the trigger and bought the dip on the 6th, you did okay. Over here on the 7th, it did go higher the next day. Oh, and then it went higher after that. So that would have been a loser if you waited to sell it there, because it did go a little bit higher. Here's your euro again versus the dollar. I'm on page 4 if you're following along there at home somehow. There's whatever. Here's your euro. One day, sort of similar pattern. Just a small amount, and one day ahead of the actual high that was on Monday the 10th. Here's your Japanese yen. You were just showing that on the charts there. I did studies back in the 90s, way back. The yen, these currencies turn on the full moon, new moon, and the yen, I did have somebody do a statistical study, and they said that the yen was one of the best at turning on the moon. So there you go. There's a little bar right there ahead of the top, either side of that. So you're either one day late or one day early, and then it went just a little bit against you before it rolled over and went your way. Here's crude oil. I think that was just about perfect there. The crude oil top there right on the 7th. And here's, and then we also had Mars go in the Taurus the night of the 11th. And so we want to look at things that are connected with the sign Taurus. And as you might guess, Taurus is the bull. So let's look at cattle. Look at that. We had a nice little short-term pullback there in the cattle.
Norm, we gotta pay some bills. The music is on.
Alrighty.
Be right back.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, with Norm Winsky of Astro Trends in Florida. Norm, you want to continue on, please?
Yes, sir. Just before the break, we were looking at the cattle chart at the bottom of my page 4 there. That green arrow is where the planet geocentrically, from the point of view of the Earth, Mars entered the sign Taurus. And as you see, just Taurus the bull. As you might guess, we want to look at cattle for Taurus the bull. And guess what? We had a nice little pullback low there, right when Mars entered Taurus. And then the cattle had a nice move up, you see. Did I say that? Nice move up?
Yeah, I think you did. Yeah, I'm surprised you did, but you did say it. So go ahead, Norm.
There we go. Got to have a little fun every now and then, right, Larry?
That's as little as you're going to get, I can tell you. Go ahead, buddy.
All right, on the cotton here, I'd say this a miss. We had an obvious sort of narrowing pattern here, triangle wedgie pattern, whatever you're going to call it. Looking for it to break out, and it took like an extra day or two, so I marked that with a red arrow. That's kind of a miss on the cotton there. All right, here's what everybody's been waiting for. Here's your holiday shopping list. Here's what's coming up this weekend. We have an unusual pattern. Well, first of all, let me mention on the stock market. I don't know if anybody remembers it. I went back and looked last night. The S&P 500 topped on September 21, one day ahead of the autumnal in the northern hemisphere. Autumnal equinox would be the vernal equinox in the southern hemisphere anyway. And so, well, guess what we have coming up this weekend? We have the solstice point when, it's winter, turns winter here in the north and summer in the south. So that's, Gan is dancing in his grave now, getting all excited. And we have a full moon within a few hours. All these things are coming together within a few hours of each other over on Saturday, so there you go, over the weekend. So we're going to round up I don't know, these aren't big cycles. These are little cycles that are combined, could translate to a big cycle, just because sometimes when you get smaller cycles clustering together, you get something bigger. I think it's going to be maybe a little better than just your usual full moon or no moon. So, we get some markets at an extreme. Larry, can you think of any markets that are at an extreme now?
There's a few, Norm. There's a few.
Yeah, exactly. Maybe the stock market, for example. Anyway,
and crude oil.
There you go. So the markets that are at an extreme, that's where you want to look if they're on my list here, coming up here into the weekend. Okay, if they're at or near their lows or the highs, then there's a good chance they're going to reverse over the weekend, or probably not later than Monday morning. Okay, so here's our holiday shopping list. Let's see. After tonight, well, I'm getting a little ahead of myself here. I got one more thing cycle here for tonight or tomorrow. We have Helio, Jupiter, and Sagittarius to Pluto and Capricorn. So you want to watch for possible change in trend for cocoa, coffee, hogs. Nobody cares about oats, stocks, and T-bonds. And then this weekend, we got one more here with the U.S. A change in trend for stock C bonds and U.S. dollar, which is probably just going to be repetitive of what's coming up this weekend, because this we have the full moon in the sign Cancer and the Capricorn solstice. The sun is, from the point of view of the Earth, is entering the sign Capricorn. So we want to be watching our, round up the usual suspects. Plus, we're running a special on coffee and silver. So you want to watch coffee, corn, Forex, your currencies, gold. Nobody cares about oats, OJ, soybeans, silver, stocks, T-bonds, and wheat. There's your holiday shopping list. Okay, so watch these markets. If they're at an extreme into the weekend, there's about a 75% chance that they will turn by Monday morning. Okay. Now moving on ahead here now, and that's pretty much main part of my presentation there, Larry. We could talk about the free classes if you mentioned Larry's name, or we can talk about a little bit about the day trading. The volatility on the stock market has greatly increased the profits on my day trading system. I got people who are making 2 and 3 times more than they were earlier in the year with my day trading system. It's fantastic. If you don't have a regular job where you can day trade, you might want to give me a call and learn that. It's pretty neat. It's basically the plans tell you when to get in, and minimal thinking, and that's a good thing, Larry. The less you think, the better you'll do in this game.
I agree. Right? I agree with that. Norm, one question that I have from one of our listeners is, how far into the future do you look? Like, we're coming into the end of the year here. Are you starting to look into mid-January or February for moves?
I do this on a monthly basis. So I'm working on January now.
Okay.
It takes me about 2 weeks to put all my stuff together. So I start like 2 weeks in advance,
All right, that makes good sense. And one other question that we're having from one of our listeners: do you have any one particular astro signal that you like? One that is your little pet that you keep there by the side of your desk?
Not really. Anything that makes money is good,
Okay. All right.
So
that
anyway,
makes
if
that
you
makes good
get a
sense.
hold of the reason I want to ask, I couldn't come on tomorrow, obviously, because the big stuff is this weekend. But I wanted to come a day early so that people would have time to contact me between today and tomorrow before they dive into the eggnog and forget about me. Right? So there you go.
Oh, they could never forget about you, Norm. That's a non sequitur there. So
Okay.
anyway,
All
listen,
right.
you want to tell the
See
folks?
the point. We got the holidays coming, and so hopefully they'll get a hold of me right away, and we can get them on the reservation list for the free class in January. We'll be doing the classes the first week of January, so you need to get on the list there. I only do about 6. I do individual one-on-one class, and so I only do about 6 of those a month, and so you need to get on the list there, okay? And I'll get a hold of me, and we'll go through what needs to be done to move things ahead. All righty, so here's how you get a hold of me. I'm here in usually sunny Florida, even in the wintertime. There in Naples, Florida. There's my phone, 239-594-3939. There's my email, nwinsky at embark.mail.com. And there's my Skype, is norm.winski, norm.winski. And any questions from the Tiger Den or any place there, Larry? Or you have any questions or comments? Or
No, I think you did a great job. So we'll have you on again one of these days in the future. And I wanted to wish you and Pat a happy holidays and a happy new year. And we'll see you after the end of the year. How's that?
that's great, and I'd like to wish happy holidays to you and all the folks out there in Larry Land and TFNN Land and so forth. And so looking forward to helping some folks, and it's I got 50 years of experience, almost as much as Larry, and I'd like to share some of that with the folks, and I offer that for free. You just call up and say Larry sent me. You get the free 6-hour class. I'm going to teach you some astro, some advanced Fibonacci, some fractals, some of my different forecasting models and so forth, and prove to you that this makes money.
And if the sheriff doesn't catch us beforehand, we'll be right here, won't we?
Yes,
hey,
sir.
Listen, thanks a lot, Norm, for being on, and we will have you on sometime right after the first of the year when we have the next We've got a full moon, so the next new moon we'll see in about 14 days. May God bless,
Right
Norm.
on.
We'll talk to you later.
Thanks a lot.
Bye-bye.
Happy New Year. Bye.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I have posted the chart of the sugar the sweet. And as you can see here, we're very, very close to a 61% retracement. Yesterday, it was relatively wild range. We had about a $700 move in sugar, which for a market that moves very slowly, that was quite a bit. It's nothing like natural gas, folks. that is the pork bellies of the energy complex. That thing is just absolutely amazing how it moves. But the sugar has held here. What I would be doing if I were looking at this, Ruby, is I would be watching for tomorrow for a 61% retracement to be hit. That's what I would be looking for. If we could get to that level, we'll be seeing it. Anyway, let's just get back here. I posted the chart for sugar. I thought that I did. Let's try it again. Oh boy, this is not a good thing. But let's get it up here. Doggone it. You know, you're absolutely correct. Boy, there's a hissing in my earphones here. I wonder what's going on with my computer. Anyway, you can see right around the 1215 level in sugar. We closed at 1247. I don't know where we're working right now, or where we're trading right now. But that area is an area that should be some pretty good support. With all this Astro stuff we got coming in today and tomorrow, it's probably best to wait till the weekend. You might have to pay up for the prices if the bottom is in, but we're looking at some real interesting things here forming in these patterns, and it looks very, very. And by the way, pay very close attention to 1030. Play 1030, and I can't help but the flash. I don't know what's going on with my computer, folks. I really don't. If the chart is flashing, I'm not touching anything. I'm just talking. I don't know why it's happening that way, so I apologize for that. But watch 1030. Watch it in a half an hour. There should be some really good things going on. Unfortunately, Ruby, I don't have time for gasoline, but it don't look good.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.